Are you eager to invest but unsure about how to get started? This video will explain what a brokerage account is, the different types available, and why having one is essential for your investment journey. Whether you're a beginner or looking to expand your financial knowledge, this video will help you navigate the world of investing. Before we dive in, if you've ever thought about investing, the first link in the description takes you to Interactive Brokers, the platform I use. Are you ready to dive into the world of investing? A brokerage account is your gateway. This account allows you to buy and sell various investment products. It is essential for anyone looking to grow their wealth. Understanding brokerage accounts is crucial for making informed financial decisions. Let's break this down further. What is a broker? A broker serves as a middleman in the world of investing. Brokers facilitate transactions between buyers and sellers. They play a vital role in connecting those looking to invest with those offering investment opportunities. Brokers have expertise in financial markets. They help navigate the complexities of buying and selling securities like stocks and bonds. Without brokers, investing would be much more challenging. The importance of brokerage firms. Brokerage firms are essential for modern investing. They provide access to various financial markets. These firms ensure that investing is fair and accessible to everyone. They offer tools and resources that help investors make informed decisions. With brokerage firms, you can find financial advice, market research, and trading platforms. These services empower individuals to take control of their financial futures. Defining a brokerage account. A brokerage account is specifically designed for investing. Think of it as a specialized savings account. Its primary purpose is to allow you to invest in assets like stocks, bonds, and mutual funds. The goal is to grow your money over time. Unlike a regular savings account, a brokerage account is not just for holding cash. It is meant for actively investing and seeking returns. Types of brokerage accounts. Brokerage accounts come in various forms. Each type serves different needs and goals. Understanding these types is crucial for making the right choice. The individual standard brokerage account is for one person. This account is the most common choice for personal investing. A joint brokerage account allows two people to invest together. This is often used by couples. A custodial account is for adults to invest on behalf of minors. It is a way to help children start their investment journey early. Then there are retirement accounts like IRAs. These accounts are specifically for retirement savings. Lastly, we have margin accounts. These accounts allow borrowing money to invest but come with higher risks. Choosing the right type of brokerage account. Selecting the right brokerage account is essential. Consider your investment goals and financial situation. Think about your risk tolerance as well. The type of account you choose can significantly impact your investing experience. Look closely at fees and commissions associated with each account. Lower fees mean more of your money stays invested. Make sure the account aligns with how you plan to invest. Different types of brokerage firms. Brokerage firms come in three main types. Each type offers different services and fee structures. Understanding these differences helps you choose the right one for your needs. 1. Full-service brokerage firms. Full-service brokerage firms provide a wide range of investment services. They offer financial planning, investment advice, and personalized service. These firms are ideal for those who want guidance and support. Examples include Morgan Stanley and Charles Schwab. 2nd, discount brokerage firms. Discount brokerage firms focus on lower fees. They provide essential services but less personal advice. This option suits more experienced investors who can make decisions independently. Firms like Fidelity and eStar Trade fall into this category. 3rd, online brokerage firms. Online brokerage firms operate entirely on the internet. They usually have the lowest fees and offer a user-friendly platform. These firms are perfect for tech-savvy investors. Examples include Robinhood and Vanguard. I've researched several investment platforms and recommend Interactive Brokers as a suitable option for beginners. Click the first link in the description to learn more. Brokerage account versus retirement account. Brokerage accounts and retirement accounts serve different purposes. Understanding these differences helps you manage your investments effectively. A brokerage account allows you to invest freely. You can buy and sell assets without restrictions. On the other hand, a retirement account, like an IRA, is for long-term savings. It has specific tax advantages but comes with withdrawal rules. When you invest in a brokerage account, you pay taxes on earnings immediately. In contrast, retirement accounts allow tax-deferred growth. This means you won't pay taxes until you withdraw funds during retirement. Withdrawal flexibility is another key difference. With a brokerage account, you can access your money anytime. However, retirement accounts have penalties for early withdrawal. This can limit your access to funds when you need them. Brokerage account versus savings account. Brokerage accounts and savings accounts serve different financial goals. Knowing the differences can help you choose the best option for your money. A savings account is designed for short-term savings. It typically offers low interest rates and is FDIC insured. This means your money is protected in case of bank failure. However, the returns are minimal. In contrast, a brokerage account is for investing. It allows you to purchase stocks, bonds, and other securities. The potential returns are higher, but so are the risks. Your money is not guaranteed and can fluctuate based on market performance. Pros and cons of brokerage accounts. Brokerage accounts come with both advantages and disadvantages. Understanding these can help you make informed decisions. One major advantage is the potential for higher returns. Investing in stocks and bonds can significantly grow your wealth. Additionally, brokerage accounts offer flexibility. You can buy or sell investments whenever you choose. However, there are risks involved. The value of your investments can go up or down. This means you could lose money. Fees are another concern, as they can eat into your returns. Lastly, there is no insurance for your investments. Unlike savings accounts, brokerage accounts do not offer FDIC protection. This means you could lose your entire investment if the market declines. Maximizing your brokerage account experience. To get the most from your brokerage account, consider these tips. First, educate yourself about investing. Understanding market trends and investment options is crucial. Second, keep an eye on fees. Different firms charge varying amounts for services. Lower fees mean more money stays invested. This can significantly impact your overall returns. Lastly, set clear investment goals. Knowing what you want to achieve helps guide your investment decisions. Whether it's saving for a house or retirement, having a plan is essential. Next steps. A brokerage account is a powerful tool for growing your wealth. It offers opportunities that savings accounts cannot. However, it comes with risks that you must understand. Before opening an account, consider your financial goals. Research different brokerage firms and their offerings. Make sure you choose one that aligns with your needs. Once you have your account, stay informed. Keep learning about investment strategies and market trends. This knowledge will help you make better decisions and maximize your investment potential. Are you ready to take the next step? Given these factors, a thoughtful approach to investing is crucial. I've found the Interactive Brokers platform to be a valuable resource. You can find it linked below. Go ahead and check it out.